Have you ever wondered if a robot could handle your money better than a person? Well, it's not science fiction anymore. Today, we're going to break down a really fascinating study that pitted a powerful AI, GPT-4, against actual, seasoned financial analysts in a head-to-head stock-picking challenge. So who wins? Human gut feeling or cold, hard machine logic? Let's dive in and find out. But hang on. Before we jump into the main event, we have to talk about the biggest, most universal challenge that every single investor faces, and that's our own emotions, right? When the market goes haywire, our instincts can sometimes send us running in the completely wrong direction. This battle is all in our heads, not on some trading floor. I mean, you know the feeling. A stock is just skyrocketing, and that fear of missing out, that FOMO, is just screaming at you to buy, usually right at the top. Or the opposite happens. It's crashing, panic kicks in, and you end up selling at the absolute bottom. These reactions are so powerful, and you know what? They're so often wrong. And there's a name for this whole phenomenon. It's called cognitive bias. It's basically our brain's way of taking these little mental shortcuts that unfortunately can lead to some really irrational decisions, like being way too confident in one of your picks, or maybe jumping on a meme stock just because everyone else is. And maybe the biggest one, holding on to a losing stock for way too long, just hoping it'll bounce back. Sound familiar? And look, this isn't just a rookie mistake. The research we're looking at today makes it perfectly clear that even the pros, the experts, fall into these exact same traps. So the big takeaway here is that our emotions can be a huge roadblock when it comes to being successful financially. So that brings us to our two competitors. In this corner, we've got the human analyst bringing years of experience, expertise, and intuition. And in the other corner, we have a pure, data-driven artificial intelligence. All right, so let's break them down. What are their strengths and weaknesses? The human analysts, they bring that hard-won experience, that gut feeling, but they're also vulnerable to all those pesky biases we just talked about. The AI, on the other hand, it is all about the data. Zero emotions involved. Now, the trade-off is that it can sometimes miss that bigger picture, the human context that an expert might pick up on. Now, to make things even more interesting, the researchers didn't just use one AI. Nope. They actually used two different versions of GPT-4. The first one, let's call it V1, only looked at the raw numbers, the financial statements. But the second one, V2, got those same numbers plus a whole bunch of news articles. The idea was to see if understanding the public story and the market buzz would actually make a difference. Okay, let's head to the arena and see how this whole challenge was set up. The design was actually pretty simple, but really smart. So here's the play-by-play. First, they picked 60 companies, the 30 best performers and the 30 worst performers from a specific quarter. Next, they gave the exact same company data to both the human analysts and the two AIs. And finally, everyone had to give a rating, from strong buy all the way down to sell. Super simple, a totally fair head-to-head fight. And this, my friends, is where it gets really interesting. The results showed a huge difference in how humans and machines look at the very same problem. All right, round one, optimism. Given the exact same set of stocks, who was more likely to slap that shiny strong buy sticker on a company? The results were, well, wow. The human analysts were way more optimistic, giving a strong buy rating almost 20% of the time. And the AIs? They were so much more reserved. The one that only looked at the numbers gave a strong buy less than 2% of the time. I mean, just look at that difference. Okay, so if the humans were the optimists, what about the other side of the coin? Who was more willing to deliver the bad news and actually issue a sell rating? And this is where it just becomes crystal clear. Both of the AI models were totally fine with issuing a sell rating on 10% of the stocks. The human analysts, almost never. We're talking less than 0.5%. It seems like the AI had absolutely no problem being the bearer of bad news, while the humans were, a lot more hesitant. This chart from the original research paper really says it all. You can literally see the human analysts' optimism in those big, strong buy bars, and you can see how much they hate to issue a sell rating. The AI, though, it shows a much more balanced and, you have to wonder, maybe a more realistic view of the world. And this was especially true when they looked at the struggling companies. The AI was really quick to say, nope, this is a downgrade. The human analysts, though, they often held on, maybe with that hope for a big comeback. It really suggests the AI is just a much tougher, more objective critic, totally free from that emotional attachment that can cloud our judgment. Okay, so the AI is more cautious. We get it. But that doesn't automatically mean its picks are better, right? So this is the final most important round. When they did recommend a strong buy, whose picks actually went on to perform better? This is the big one. And the winner is the AI that read the news. It turns out that when V2, the AI that also analyzed news sentiment, recommended a strong buy, those stocks did significantly better than the ones picked by the human analysts. This really shows that combining that cold, hard data with an understanding of the market narrative, well, that's a seriously powerful combo. So what does all this mean for the future of investing? Is it time to just fire all the humans and hand our portfolios over to the machines? Well, not so fast. The real takeaway here isn't that AI is going to replace human experts. It's that the future is all about partnership. Think of the AI as this incredibly powerful tool, an advisor that gives you a completely rational, data-driven second opinion to help you fight your own emotional biases. So let's just quickly sum up everything we learned. First, AI is just fundamentally more cautious and less optimistic than we are. Second, it is not afraid to make those tough sell calls on weak stocks. Third, when you give an AI financial data and news sentiment, its accuracy can get even better. And finally, the future isn't about choosing one over the other. It's about combining AI's objectivity with human wisdom, the best of both worlds. Which leaves us with one final big question to think about. Knowing what you know now, that an AI can be more rational, less emotional, but still lacks that human touch, would you trust it with your money? Something to chew on.